Well, happy Halloween, folks. Welcome to the Market Roundup. Joe with you here on the 31st of October. It is Tuesday. Moving into a Fed day, which is spooky, right? We got Halloween tonight, and then tomorrow we have the FOMC announcement. Well, I'm trying to make it a little bit more exciting than it is. Let's jump into it. I've got my 2 cents. I'm going to share it with you guys. Know the drill. Just take responsibility for the outcome of whatever you get from this class and all our other classes. First off, I'm going to break down the meaningful news of the day, what's going on in the markets, the sentiment. Let's get a gauge for it, break down the charts, and as always, share trades with you and the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you can see that we just continued the bounce that we had from Monday. Pretty good sell-off on Friday, set new lows, but we were bouncing off of some key points, and more importantly, folks, moving upward to major resistance areas off of that support. So let's get into the daily news here. The markets bounce off of major support levels this week. I'll break it down with some lines. Earnings mixed in all sectors. So I'm seeing good news and bad news. I'm seeing bad news punished pretty aggressively. We saw stuff like Google and Ford. However, stuff that has actually beat, Microsoft is one to take a look at as an example, has done pretty well. What I want you guys to keep in mind is with the levels of where the move has happened to the upside, if it is indeed setting new highs, the majority of them are not. So let's not misconstrue good news with, oh, this is going to turn things around, we're going to go back bullish. We are still in our bearish market, and I'll explain that here in a minute. We do have the FOMC tomorrow. That's the big piece. So let's break down what we did today. The Dow, the S&P, and the Qs up a little bit more than they were yesterday. Well, or I should say a little bit higher from where we finished yesterday. But overall, folks, about a 0.5%. About a 0.5%. Russell's just shy of 1. Oil took another big spill. No pun intended there. Down 1.3%, and then gold slipped as well. Now, oil is still up over $81 a barrel. And I imagine the majority that we've seen when it comes to the energy or oil specifically to the downside is because of that big surge that we saw the last subsequent weeks, a few weeks back. So overall, the advanced decline line, 65% advancing, 30% declining, 5% going nowhere. But what really has caught my eye, and I want you guys to focus on, is the above-below 50-day moving average, 82%, 18. We are still below the 50-day moving average on the majority of stocks. This is still a bear market, regardless of where we're seeing this bounce and where we go from here. Let's jump directly into the chart because I want to kind of talk about something that Corey said that I thought was really, really cool yesterday. Now, he had a point about this level here of resistance, which we know is super, super important. But it doesn't have to hit this level and immediately roll over. We could see a move higher than that. We could see a move come back up above this 20-day moving average here. We could see one actually come back up to the 50 and set an almost double top, if you will, before it rolls back down. So I don't want to be too aggressively bearish. I am very much leaning towards the bear side when it comes to what we've seen over this last surge and what we've seen overall in the overall trend of things. However, we could see a little bit more of a rally off this point and back up to this key level of, or I should say above the 420 level, the key level in the SPY, and kind of meander around there. And what I mean by that is I would not be surprised if we saw these markets kind of park themselves somewhere around this area. I'm going to go all the way. I'm going to make it as big as possible here. Somewhere around there over the next little bit. And why that would happen is because the markets are genuinely trying to figure out, okay, have we sold off enough? Is there places to go out and buy? We do have a whole bunch of earnings coming up. I've got some I'm going to show you here in a second. But there's that range of where do we go from here? And has it sold off enough? It really just depends on sentiment. It really depends on what the markets take for these next few days, whatever the FOMC says, and where we go from there. Here is the Qs. That's the resistance level that we're talking about. This is the area that I think it might hang out with. And what I mean by that is the area that I expect this with a increased move to the upside, I imagine, or I should say with good news, good numbers, maybe a dovish Fed. I imagine that we get back up into this range and we might park ourselves for a little bit. Overall, let me just be clear. We are still in a bearish trend. This should absolutely be treated. I'll just draw this little thing here. This should absolutely be treated as a bear rally. Sentiment should not change. So if you've got some bears that are expiring this week, you got some bears, you got bearish exposure, you should not change that. I know the next couple of days here could go a little bit higher, but overall, folks, we have to trade this market in front of us. Let's take a look at the heat map. And as you can see, everything that was super red is still kind of green. Bounces in Microsoft. Microsoft had good news. We have Apple coming out later on this week. I believe it's Thursday. Google missed, and they're slightly down, a little bit lower than expected. Nvidia moving lower. Lots of AI talk, lots of AI restrictions when it comes to China. Worries. Eli Lilly, Amgen, a couple that are on board to announce, Amgen at least, and moving slightly lower. Other than that, it's just what you'd expect. All sectors are participating in the overall bounce. So I want you to really focus on that. There's some good news and bad news on all sectors, but they seem to be all up or all down, which means the sentiment of the markets is still to the bear side, and that's why we have to treat it as such. Let's get to my breakdown. The overextension gets me a little bit hesitant to roll out some new bears, but it does get me excited because if we do indeed move back up to some of the levels, I'll draw it right here since it's right in front of us. If we move back up to this area and make a beautiful little pivot point, and we can continue maybe even a steeper slope from there, then I'm going to get very, very bearish. I'm going to be more towards this -3 area, right, on the monthly outlook. Now, I'm zero, and the reason why I'm zero is because guess what? We have an FOMC statement tomorrow. I don't know what the Fed's going to do. You don't know what the Fed's going to do, so I'm not going to touch anything. My exposure is comfortable where it's at. I'm bearish, and I'm happy about it, and I'm not going to change anything. Now, I do want to echo something that I thought was really cool that Corey mentioned yesterday. This rally could absolutely get back up into this area. It truly can. And that might throw some people off. And that's why I drew this little box on the Qs and the SPY. Because if it's somewhere up in this area, well, that's a lot higher than resistance that could hit tomorrow. And it might show, oh, geez, a little bit of an exuberance or a little bit of more of a bullish move than I expected. What we need to focus on, and this is difficult, folks, we have to stick with our overall charting, our trends, focus on the 50-day, focus on resistance areas that were established previously. Yeah, sure, it might blow through this line here, but that doesn't matter because if it adheres to this above line, it can still stay in this move to the downside and be bearish. This is where a lot of my bearish traders get skittish. Oh, I got to get out. I got to get some more bulls. It's just a bigger bounce than expected. So I do want to echo what Corey said yesterday because he makes a valid point. However, when we roll, I'm going to be comfortable adding more bears. I'm going to be comfortable moving my weekly outlook to a -1, -2, -3. We'll see where the sentiment goes based on what the Fed says tomorrow. That's a mouthful, isn't it, folks? So not a lot we can do today, except for maybe go out and trick or treat. Don't worry about it. We'll see where the markets go. Bulls, bears, sideways, Roblox, Verizon, T-Mobile, AT&T I actually threw in there. I thought was pretty interesting. But those are stronger. They're showing a little bit of outperformance. Verizon did beat numbers. Roblox is something that we've looked at for a few weeks now on the strong side. ED for a neutral trade. I thought that was cool. Rob talked about it Friday. I'm going to carry it forward as well. Potential bear trades. I kept the ones that I had from Tuesday of last week, but some of them are in bounces. Just be patient. A bounce is fine. It's part of a bearish trend. It's how it works, but I do have one of those that I think are pretty decent. So let's break these down. First off, I like T-Mobile. It's got a really cool ascending triangle pattern going on here. It just looks nice. It's moving higher. Little resistance there. This isn't something that I'm willing to buy and have this thing hit 150 anytime soon. Understand that I'm still glass half empty. I'm still a bearish exposure overall in my portfolio with a bearish outlook, but this is showing a lot of signs of outperformance. It did have a little bit of oomph when it comes to the markets today to push it higher, so just be patient with it. Something to put on kind of the back burner if you're looking for kind of a trade. that you could add to your, I should say, bowls, or if you needed one, or something to kind of absorb a bounce. Here's ED, Consolidated Edison. I do like it. I do think it's kind of cool. There's a pretty good range, I'd say right around here. This is kind of the box that I'm shooting for. What I like about this is a couple of things. I like the ascension here, and I also like this resistance across that area. So it's got this ascending triangle pattern, but we do have this really good resistance up at that area, which kind of leads me to focus more on, well, let's just call it what it is. I'm just going to draw a box in this area right around there. So the more, and even if it goes higher, up between 92, 93, I'm totally fine. As long as it can stay around this 87, 86 and a half area, sideways would be kind of a fun trade on this if you guys want a sideways trade. So let's go to the bear. Take a look at all of them. They're all pretty cool. I'm picking on ExxonMobil specifically. Why? Well, I've seen oil go down in the last little bit, so I figured, hey, let's jump on something that should be moving lower. And as you guys can see, it truly is. It's a pretty steep drop right there. A couple things that I do like about this chart. It's got this beautiful crossover right at that pivot point, right? So sideways to down. If you don't want to get too aggressive, you don't have to. You can play something along this area here. But if this does slide, then you might want to get a little bit more aggressive. I did zoom in, so you got to zoom in a little bit further out to find another target to that down there. So the bear trend remains. Focus on the charts. Earnings can have an impact, and it will specifically on individual stocks. Make sure that you take a look at some of the charts that did beat numbers because they're not breaking above resistance levels. They're going higher. They're coming off the bottom aggressively. But until they establish a bull trend, that's all we can take from it. Lots of economic stuff. Economic numbers are showing expansion in many reports. The GDP, retail sales, you guys can read them all there. They're all hotter. The Fed sees the PCE. It came in hotter as well last week, and they said, it's manageable. We'll see what they say tomorrow. We also have the ADP with it. Earnings reports continue. We've got Philip Morris, AMD, OKE, First Solar. We've got lots of stuff here. QCOM. Tomorrow and Thursday, Apple, Eli Lilly, and Starbucks, stuff like that. So just make sure you stay away or stay aware of those. Check them as they come, and make sure that you follow along. If something beats, let's see how far the consumer buys it or people buy it. If it's just a little bit of a blip, and it could be a huge percentage, but if it doesn't clear resistance areas, we're still bearish. Keep that in mind. All right, guys, thank you so much for joining me. Have a safe and happy Halloween, and we'll see you next time. Bye, everybody.